The Investor Club bonus stories.
Hey everybody, I'm Zach.
And I'm Jesse, and you're watching the Investor Club bonus stories.
Sorry about my voice this week. Hopefully I'll get better soon. I want to talk about what opportunity looks like. So disclaimer here, we're not financial advisors. We are long on Tesla. So don't listen to us in terms of how you should invest. Just, get some ideas from us maybe, but then do your own research. And of course, use our Slack channel. Super valuable for doing that. So I really don't see why people have such a problem understanding this very simple concept. You buy low, you sell high. I mean, if you were to ask anyone to sum up the stock market, I think that's what they would say, right?
I've seen that on Arthur, a show for children. It was actually the sock market. It was a joke.
Yep.
And
Father Guido Sarducci.
Anyone that you ask, you buy low, you sell high.
So if you walked into a car dealership and you saw this classic car that you've been drooling over for your whole life, and the price was 65% off, you do two things if you could afford it. Okay. Number one, you check under the hood and you make sure that it was actually mechanically sound. You'd make sure the dealer hadn't just given you this destroyed car. But if it was good, number two, you'd whip out your checkbook or your credit card or whatever, and you'd buy it before someone else does, because you'd be like, this is going to sell. I just lucked out today and I happen to have found this.
So let's check under Tesla's hood and see if the company is still in good shape. But first, let's talk about analysts.
So Morgan Stanley analyst Adam Jonas, you know him well. He covers Tesla a lot. He has a new price target of $250, which is down from $330. Now, most analysts follow the trends, not the core financials. I want to say that again. They follow the trends, not the core financials. They know better than anyone that markets get overexcited both in up and down markets, and in these periods, they generally don't make any sense. It's a herd of people running for the exits, crashing over tables, making stupid decisions. If they see a bunch of people headed one way, they do what humans do, and they follow the herd, only to find out a moment later that that wasn't the way out. And what do? They wildly look around for some other group that's headed in some other direction. Analysts are the ones saying, I think a bunch of people are headed that way. Thanks, analysts. You might be right. You may be wrong. What you'd like is someone to pull up the building's blueprints and say, hang on, everyone. The closest exit is over here. Why isn't there that guy? You know why? Because you don't pay that guy. The big investment banks pay most of these analyst salaries, and their job is to misdirect.
Wait, why?
So that the fund managers they pay can make money. They buy when you're selling, and they're selling when you're full of FOMO. It's as simple as that. Who do you think is paying for this FUD? Now, you might argue with me. You might say, Zach, 80% of the market is institutional investors. 20% is retail investors. How could the 20% retail investors move stuff? Well, it doesn't take that much to move stuff. In fact, we've talked about this before. If you want to move the price of oil, for instance, you don't need to have 80% of the people stop buying oil. You need just a tiny, tiny percentage of the people, and that will actually make a huge change in the demand and supply curves. So back to the reasons why we're not running for the exits here. Okay, so let's look at the fundamentals. Unlike Jonas, who is basically just telling you, right now, everyone's dropping the stock, so I'm going to drop my price target. He does that so he doesn't look foolish, because as the price drops, people go like, why is the price dropping? Why are you saying it's going to stay high? No. I said I'm lowering my price target.
Right. But I'm staying a little bit more in the middle.
Right.
And then when it goes above that, I'm going to stay a little bit in the middle.
Right.
And that way I'm always kind of right.
Exactly. So let's look at the fundamentals here. Number one, Tesla has no debt.
They have a little debt.
No.
Like a little debt.
No, it's just like weekly bullshit.
It's like
it's not
cash
debt.
flow debt. It's not
exactly. It's not
major debt.
No, we're going to get into cash flow in a second, but basically you can think of it as no debt. Yeah. I mean, any giant company is going to have a little debt. They have to move things. But I'm saying in terms of long-term debt, they have none.
Compared to other
automakers. Look at Ford and stuff. They are riddled with debt. Okay, so when bad times happen, we're entering a bad time. When the rates go up and you have a lot of debt, guess what? You're in big trouble. Tesla has no debt. Number two, Tesla has $20 billion in cash. Keep that number in your back of your mind. Number three, Tesla has phenomenal free cash flow. The estimate for 2023 is $14 billion, more than any other car company. $14 billion of free cash flow. Number four, Double-digit margins, the best in the business. So every car they sell, they make more profit on that than anyone else can make. So you show me where Tesla is at any kind of risk. In fact, Tesla, in my opinion, has never been stronger. So Tesla is crushing the competition. 2023 will see the continuation of a new product line, the Tesla Semi, which will dominate, the Cybertruck, which will dominate. New gigafactories will be coming online, ramping up gigapress innovations, battery innovations, Tesla Energy, both solar, batteries, and VPPs taking off. And you're telling me that Tesla should be worth $385 billion with a PE ratio of 38. Are you f***ing nuts? Just because everyone else is nuts doesn't mean that you should act like a fruitcake too, okay? Come on. You're smarter than that. This is what opportunity looks like. The problem is we aren't really trained on what it looks like. You don't go to school for it. No one teaches it. And have you ever had a class on this is what opportunity looks like? So the only way you get to learn this is with age, pretty much, or experience. And I say age or experience because markets are cyclical, right? And you have to live through a number of them before you begin to see patterns, or you're just a genius. I happen to be older than you, so I've seen more of this. I've been investing since I was 13, and I've been paying attention. And we're in a period where the markets are down. The markets are pulling everything down. That's normal in this kind of market. That doesn't mean that everything is valueless. It's the opportunity part. It's the people running for the exits. It's the stampede effect that you can take advantage of because psychology is taking over, but you can be contrarian. If you're contrarian in the right times, it's where you can make money. Everyone loves to quote Warren Buffett. This is one of his big quotes. When there's blood on the streets, that's a good time to invest. There's blood on the streets right now. Lots of companies are going to go under because the weak companies are going to have trouble raising funds. They're going to have trouble with their debt. And so even companies that have pretty strong ideas and strong people and stuff, they'll still financially just go under during this period. I just told you about the big numbers with Tesla. Please, if I'm wrong, please, if you have some reason why I should be bearish on Tesla, please put it in the comments. This is the strongest I've seen them since we've been covering them. Yes, the stock price is low. Who the cares?
Tesla doesn't need to raise any money.
Exactly. They're not going to be selling stock. Now, Elon might care because he needs to, he said he's not going to sell stock for 2 years. So maybe he doesn't care. But you should be taking advantage of the situation. All the smart people out there, the Cathie Woods of the world, are saying and have been saying, keep powder dry for the situation. Now, we don't all have cash right now. If you don't have cash, you can't take advantage of this unless you can sell something else. And it's not a great time to sell a lot of other things.
Sure.
And I know a lot of people are saying, why didn't you talk about getting into oil and stuff? That's been doing great. Because I'm not going to invest in oil.
Oil.
Oil. Like, yes, there are some things that have been doing relatively well in this market. When the market gets frothy like this and blood is in the streets, they look for things that are like, well, everyone's going to buy toilet paper. Sure. So I get that. But on the other hand, when Tesla's this low, what do you think is going to happen when things turn around? Let's talk about let's just say this year, 2023, is just a recession year. Let's say it's just awful. And let's say Tesla just keeps churning down here at the low 100s. Sure, that would suck.
I mean, it could get down to 50. Who cares?
It's not going to get down to 50.
It won't. But I mean, but that's what I'm saying. Like, it is not going to affect Tesla, the operations part of Tesla. This is where I think some people kind of equate the company and the stock price too closely, as if it's going to have a significant effect, which it can. It can if a company really relies on raising money at some point for some reason, either they need cash or they want to build a factory or something like that. Tesla has proven that they can, first of all, that they can take on debt if they need to build a factory, like they did with the Gigafactory Shanghai.
They're not going to need to.
They don't need to because they have enough cash and they already don't have any debt.
Look, Zachary Kirkhorn, the CFO, is a really smart dude. And what he did was he set them up perfectly for this. He started predicting to himself and to others in the company that there would be a recession at some point, probably when he saw so much money being printed by the U.S. government. He said, this can't last forever. Let's prepare for some rainy days. I'll bet anything Tesla was going to build more gigafactories, and they waited. So let's go to this tweet from Mayor Thacker. What happens when Tesla prints a $4 billion free cash flow quarter and net cash on the balance sheet swells to nearly $24 billion on January 25th? That's at least 3 years of cash runway entering the recession, assuming zero sales and zero layoffs. And Elon said, because that's exactly what they planned for. A worst case scenario of zero sales. I mean, that's not going to happen. Zero layoffs.
Zero sales?
So what I'm saying is they have a 3-year runway.
Wow.
If everything went to if the world just stopped, okay, they have a 3-year runway where they can continue to exist, and not only exist, but grow.
So let's go not that far.
No, let's go that far for a second. Let's go. Let's say it's just the worst, and let's say it's not a 1-year recession. It's a 3-year recession.
Wow.
Everyone stops buying cars. Everyone stops getting solar systems.
So the Great Depression,
The
part 2.
Right. The Great Depression, part 3, okay, hits. Tesla could actually get us out of that because they would still be spending money. They would probably take advantage of the low wages and everything that would come with that to buy factories, build factories, and be ready for when we come out of the recession. Because remember, the part about recessions, what happens when that cycle's over? You come back. And I would argue something that Kathy Wood has been arguing, which is we're actually through the worst of inflation right now. If you look at all the indicators of inflation, we hit the peak probably back in June. It's just that the Fed, and I don't want to get into their psychology. I don't know why they're doing this, why they're keeping the rates so high. Maybe it's smart. I don't think it is. But the Fed eventually is going to have to pay attention to the numbers and go, oh, we don't need to keep the rates this high. With the Fed keeping the rate this high, there is more money on the sidelines now than there has been in years. The put to call ratio is at 1.5. That means that 1.5 ratio more. It means 50% more people are shorting stocks than are buying them. So basically, there's such blood in the water right now that everyone is overdoing it. They're overselling. And there's all this cash waiting on the sidelines. Why is there so much cash on the sidelines? Well, because you can get a fairly decent return with no risk from putting it into CDs, putting it into almost anything.
Especially with rates so high.
With rates so high.
That's
so
how it works.
It's pretty smart, actually, if you have a lot of money, to just wait this out.
Right. You pull all your money out. You put it into a CD for a couple months. You can do
Right.
1 month CDs. You can
Right.
do 3 month CDs.
And
You can
instead
do-
of before getting 0.2%,
Yeah.
now you can get up into 3, 4, 5%. And if you have big money, waiting till there's an indication that this is over might be smart. So a lot of smart money is just pulled out of the market, which
yeah.
lowers everything. That won't last forever. It will end. And when it ends, I believe, and again, I'm not a financial advisor, don't take my advice on this, but I believe what's going to happen is that Tesla stock is going to shoot up probably faster than many other growth stocks because it is so strong, and people will look for strength coming out of the recession.
So, I mean, this tweet really emphasizes what a good position Tesla's in because there will be sales, right? That people will buy cars. Let's say
They haven't
even
stopped.
Even if it's reduced by 50%.
In fact, they'll buy more cars as the recession stays bad. People are looking for ways to what? Save money. Electric cars cost less. So when your car finally dies and you have to buy one
Right.
or lease one, you'll go, oh, well, you know what? This one's actually going to save me money.
Depends on the price of gas, but still, I mean, people are going to continue to buy cars. It might get a little bit lower, but I agree. It might even go in the way of Tesla's favor.
Also, I mean, look at that winery story that we talked about
Yeah.
this week. As you're looking to save money on your electricity bill,
Right.
you will actually go, oh, you know what? It's smart for me to put solar panels on my roof and get some batteries.
Right.
I'm just saying.
And the people who are like, they're ugly when they're forced with, well, how are we going to save money this month? Putting solar panels with a PPA could make a lot of sense.
And don't forget all these millennials who are living at home. This is different than probably any other time in human history where so many people are living in their parents' houses way later. That means that that's all freed up discretionary income. Those people aren't paying, they're probably paying mommy and daddy a little bit of rent, but they're paying nothing compared to what they would be paying if they're out on their own. And so they are the ones who can afford a Tesla or afford to tell their dad or mom, hey, let's put some solar on the roof and save some more money.
Sure.
So Tesla looks good in any of these situations. It's not making Gucci handbags. Look, if you're making Gucci handbags during a recession, yeah, you're probably in trouble because that'll be some of the first things cut back on.
But
This looks-
let's go to all the other car makers.
Let's talk about that for a second. So this recession, the longer it lasts, will actually reduce Tesla's competition.
Yep.
There's companies that we talk about a lot on the show, like FUV, right? Arcimoto. They're going to have a really hard time surviving in a long recession because they need cash, and investors are not going to want to give it up for a very risky company. They're going to make them pay a lot for that. And so a company like that, if it disappears, you might be like, well, Tesla doesn't care. Sure, Tesla cares because all those people who were lined up to buy an FUV, now there's one less EV they can buy. So some of the money will go to Tesla. And you might be like, okay, so FUV goes away. I think a lot of car companies are going to go away or get really hurt during this recession.
They don't have to necessarily go away. Let's talk about like Rivian. If Rivian can't raise as much money to build their factory in Georgia, for instance,
Right.
which they probably can do, but let's say that things were going great. Rivian would probably be able to build another factory somewhere else, or they'd be able to expand a little bit faster. They'd be able to do a little bit more.
Well, let's just look at that. Rivian's trying to build a factory during a recession.
Yeah,
That's not a great place to be in.
true.
Elon's all set. His factories are all built.
It's true.
They're up and running. Now, they're not at full production yet, like in Texas and Berlin, but they are basically ready to go. I think they were going to have more factories started, but Zachary Kirkhorn probably said, just hang on a little longer. We'll be in a much stronger position. And I think it was super smart.
Because if some of these car manufacturers start either laying people off, closing plants, Tesla can come in, grab either the factories or the land with the workforce. It's a great story as well. If some plant somewhere gets closed down and then gets reopened under Tesla, and I don't know, they could buy up land cheaper. They can do all sorts of stuff cheaper. They're in a great position. So the stock being so low is just irrational.
It's complete irrational. And look, I thought 150 was a floor that I wouldn't see. And you might be like, well, if you didn't see that. But let's talk about how if you watch your favorite financial talking heads, you think you know what will happen, right? I fall for this a lot too in my earlier part of my career, where I would watch somebody I thought was pretty smart on CNBC or something, and I'd be like, so I kind of know what's going to happen. I'm in the know. Well, here's what all the big boys predicted would happen this year with the S&P 500. And they were all off by hundreds, if not thousands of points. Check out this tweet here. So those are all the big boys, the boys who have the big financial analysts on their staff.
They have teams and teams of analysts.
And all they had to do was predict the S&P 500, not a particular stock, just the whole thing. And they all thought this year was going to end much better than it did. The S&P actually closed at 3,800. So the closest was off by more than 15%. The farthest was off by almost 40%. And if we bring it back to Tesla, if the whole market was down this year, that automatically pulls Tesla down. So let's stop blaming Elon. I am more bullish than ever because this recession is going to hammer Tesla's competition super hard. Strong companies survive recessions. Weak companies do not. There will be fewer competitors left standing when they exit this recession in a year or two. That, by its very nature, will help Tesla. And lastly, a bit of in-the-weeds U.S. federal tax code for you.
Wait. Don't go to sleep and don't tune out if you're not from the U.S. What we're about to talk about actually helps Tesla almost exclusively.
Right. So, I mean, if you're from another country, you might be like, you guys keep talking about the Inflation Reduction Act. That's just a U.S. thing. I'm from Canada or I'm from Germany. I don't care. Look, the IRA introduced a 30% investment tax credit for standalone energy storage. And you might be like, that I don't know what that means. Okay, so read Tesla Megapacks plus developers can get a bonus of 10% more for using batteries made in the U.S. Check. And an additional 10% for assets that are located at decommissioned fossil fuel facilities in frontline communities. So if I read that correctly, developers can get 40% off a Tesla Megapack system. And that's even if they can't get the decommissioned fossil fuel facility. So did you hear me? The federal government will pay for at least 40% of a Tesla Megapack. It's like the IRA was written just for Tesla.
In this respect.
Not only, I mean, look, the cars, it helps them tremendously.
It's true.
Megapacks, solar, helps them tremendously. And what I'm saying here about a standalone energy system, it means that if you're a energy developer and you don't really feel like building a wind turbine thing and a solar farm, you just want to build some batteries, the government will pay you 40% of that price. So a lot of people who are on the sidelines, like, I don't know if the numbers really work out. If it's 40% cheaper, the numbers work out. So that is why we talked about in the main show, there's a 2-year waiting list for Megapacks. That is why Elon started the Lathrop facility to make it basically a Megapack factory. He's probably going to have to do that some more. He's probably going to have to keep making Megapack factories.
And it's going to be pretty easy to do.
And this is why Elon has said the energy division of Tesla will probably become bigger than the automotive part. It's just that people don't understand it. It's boring. It's batteries. Who cares?
It's too big. It doesn't
Right.
fit in their houses. Here, I really want to talk about this when we're talking about investing. So many times, and again, we get back to Berkshire Hathaway and Mr. What's his name again? I don't know why I can't remember his name.
It's kind of like Christopher Walken.
Uh-huh.
I think it's because the first name doesn't seem like the right name for the person.
Interesting.
I always think of Walken,
Yeah.
but I don't think of Christopher Walken until it's just one whole thing.
Okay.
Whereas with Warren Buffett,
Warren
I
Buffett.
don't think of him as a Warren.
And I don't think of him as a Warren.
I think
either.
of him as a Buffett.
Okay, so Mr. Warren Buffett, he says like you got to understand the product.
Mm-hmm.
So that's what I invest in, things that I understand. And it's really hard to be like, I understand grid tied solar. Battery storage. Because no, you don't. That's really complicated. I'm not gonna judge any of you for not completely understanding how a mega pack is gonna work.
And that's why we keep telling you stories. They might seem like little stories, but that winery story that we talked about on Tesla Time News, I know that's Australia, and I know that their electrical grid and the fact that they get a lot of sun and stuff is maybe different than other places. But even in that location, it shows you that
Storing energy
is worth a lot to the grid. In fact, so much that this guy who uses just normal amount of energy every year can actually make money by just being an arbitrage of that. So it shows you how important, if you do own a giant battery, how much money you can make off of it.
And we've seen this with so many of like the giant battery, obviously in South Australia, which is already profitable.
Now, can I just throw one thing into the mix?
Yeah.
What's the temperature yesterday?
It was 55 degrees here in Massachusetts.
So on New Year's Day in Massachusetts, the temperature was 55 degrees. Jesse and I went out in sweatshirts and went for a walk. Global warming. Global warming means that things are going to swing wildly and unpredictably more than ever.
Because I think there was other parts of the country where it was cold.
Yeah, I mean, I went to New York over the holidays and it was so cold. I mean, people hadn't seen that temperature. It was down to like 7 degrees. It was unreal.
Right.
When you get these huge temperature swings, it means that people go home and they do what?
They turn on the heater, they turn on the air conditioning.
Right. And we basically live in places now that we couldn't live without these basically artificial, I'll call it, heating and warming. If you live in kind of a tropical environment, you might be able to get by with just like putting on a fan or something. But if you live in the extreme cold or the extreme heat, you need air conditioning or you need a heater. There's no way that you can just tell people, you know what, can you just hold off on that for 6 hours? We don't have the energy for you. When they call for it, you have to give it to them. So there's this big burst when people get home from work or in the morning where there's this burst of energy demand that you have to, as a grid, give them the energy for. The grids are going, I'll pay anything for some kilowatt hours. Anyone got any? If you've got a Powerwall,
You can go,
if you've got a Nissan Leaf.
Hello. And then there's other parts of the day, not even week or month or year, day, where the electricity doesn't cost hardly anything.
Right.
So you buy it up then. It's almost like a little stock market, but instead of stocks, you're buying actual energy.
It's arbitrage. And I know most of us aren't into arbitrage, but there's many people in the financial world that are. It's a great way to make money if you know how it works. You can buy almost anything cyclically, and it's cheaper when you buy it than when you sell it. So like if you buy orange juice futures or something, right? You buy it when the price is low and you sell it when the price is high.
You might do this. You go to the clearance section after Christmas and you pick up
There you go. You buy your Christmas stuff for next year.
You buy either, like the wrapping paper,
Yep.
It's 50% off. I'll buy it now, put it in my closet,
I
which is already
just
full of
went to
Christmas
Michael's
stuff.
the other day, and the whole store was 60% off, and it was all Christmas stuff.
Yeah.
This is stuff that up until a few hours earlier was selling at premiums because people like, it's Christmas.
I need it now.
And then, oh crap, we need to get rid of this. It's almost trash.
So it's like
That's arbitrage.
That's kind of arbitrage. I mean, are you going to go sell it next year? No, but
You could
in
if
this
you stored
case,
it and sold it.
you
Like,
stored it in large enough quantities. But I mean, that's what I'm saying. To put it into a perspective that probably most of us can understand. I think
but
that
what
you
you're
can
talking
understand
about
this
is
too.
amazing because we're talking about something on a yearly basis, right?
Yes.
Christmas only happens once a year. This curve happens twice a day.
I know.
And
Because
so
it's so instantaneous. When
And-
you flick on a light switch, it's instantaneous, right? Orange juice futures. Does no one want to buy orange juice at 7 o'clock at night because it's not breakfast time? No. Everybody knows that they're going to have a little thing of orange juice storage
Yep.
that they put in their fridge. right? We all arbitrage. We don't all drink orange juice, but we all arbitrage certain things in our lives.
Yep.
It's not all instantaneous. And it's actually kind of weird that energy is instantaneous and that we haven't had hardly any forms of energy storage at all for so long. Like your refrigerator was kind of energy storage in a thermal battery, your house, another thermal battery.
Well, I mean, there's been,
your hot water
for instance,
heater.
dams, right? You
Yeah.
can store energy, but it takes hours,
Yeah.
if not longer, to store it. Batteries can store it almost instantaneously. You can start, oh, you're in demand territory now. Boom, it's storing. Oh, it's giving. It's storing. It's giving. So within milliseconds.
Yeah.
So it is amazing. And as more and more utilities figure this out, and as more and more utilities that don't do it go out of business,
Yep.
it's just going to be phenomenal. So I want to get back to, you guys have to look long term here. You can't be so distraught. I'm so sick and tired of you guys complaining about what's going on. Zach and Jesse, are you? Look, if you don't know this by now, then you're just not in the right business. Get out of investing. You're not gonna do well. If your mentality is so emotional that you aren't seeing this as an opportunity, do something else. There's other ways to save your money and make money. Just get into something more boring. Put it into a mutual fund. Let someone else manage it for you. You're not the right person for this. And look, I'm not trying to be mean to you. If you're not the right person for something, it's good to just know that about yourself and find the right person.
Mm-hmm.
I'm not the right person for lots of things, and I don't try and do those things if I'm not the right person for it. I'd much rather have an expert, someone I trust, do that thing for me. A lot of us in America think that we should do everything, right? Don't do this. Don't invest your money if you're not seeing what an opportunity this is right now.
All right. Well, thank you so much for joining us on Investor Club Bonus Stories. We hope that we bring you a little bit of value.
This might be one of the last opportunities to make this kind of return. Can I predict the future? No.
It
There
might be for 3 years you could buy Tesla at a depressed amount.
What I want to say is it's very smart to keep powder dry and to be buying in, kind of like what we heard from Ross Gerber saying, you don't have to put all your money in today.
Mm-hmm.
I don't know, when the best day is. You just average in when things are low, and then when things go up, you have way more shares.
Yeah. And that's going to be very fun. And this is why we are long-term investors, because it's so much easier to be right if you're a long-term investor.
Yeah, I'm not good at, talking about what I'm not good at. I'm not good at predicting exactly what the price will be this week. There's some people on our Slack who are pretty good at it. That's trading, and I'm not good at that. I am good at seeing that this is a long-term opportunity, and if you get in now, I think, just me personally, that this is a great opportunity.
Right. And again, that's why we're not financial advisors, because to be a financial advisor, first of all, you have to take a whole bunch of things, which we did not do. But also, the whole point of it is that it's supposed to be a catered thing for you, and we're talking to hundreds of people right now. You might be in the position where you're trying to get out. Right? You might be retiring and you need money now.
Exactly.
Okay. Well, 5 years from now, that's probably not going to be what you're looking for.
Right.
Or maybe you are looking really long term and this sounds really good to you. That might be the case too. We're not financial advisors. You have to do your own research. So just a little caveat. So thank you so much for joining us. We'll see you next time. Now you know.